Tech stocks are tanking, Wall Street in absolute chaos. Apple losing $250 billion in a single day. With all of this going on, is this the beginning of the 2025 recession? Let's break it down for you. The US markets just suffered their worst day since the pandemic crash of 2020. S&P 500 fell by 4.8%. Nasdaq crashed by 5.4%. Over $3 trillion in market value was wiped out in a matter of hours. And the trigger? Trump's sweeping new tariffs. A flat 10% tariff across the board and higher rates for over 60 countries, with China's total tariff rate now at 54%. Wall Street calls it worse than a worst-case scenario. Big techs are taking a major hit. Apple lost over 8%, wiping out $250 billion in market value. Amazon down by 7.2%. Meta, Tesla, Nvidia all fell between 6 to 9%. But why, if you ask? Because every major Apple product is made outside the US. These tariffs impact the iPhone, iPad, Mac, everything. And now Tim Cook faces a brutal choice. Either raise prices for consumers or absorb the losses and sacrifice tens of billions in profit. But how are these US tariffs impacting India? While the US stock market melted down, India braced but didn't break. President Trump's sweeping 26% reciprocal tariff on Indian goods shook investor sentiments. But compared to China's 54%, India got off light. Let's tell you what's happening on the market front. Sensex dipped by 0.42% and Nifty 50 slipped by 0.35%, faring better than most other Asian peers. To give you some context, Vietnam's market dropped by 6.7% and Thailand fell nearly 1%. Indian IT stocks, though, took a major hit. With the US being a key revenue hub, fears of a slowdown and recession led to a 4.2% plunge in the Nifty IT index, the steepest in 2 years. But it is not all grave news. Pharma stocks rallied after the US exempted pharmaceutical products from the tariff list. Sun Pharma, Cipla, and Lupin surged up to 4% as investors saw relief in export-heavy healthcare. Mid-cap and small-cap indices actually rose thanks to a global supply chain shift narrative. The good news, with higher tariffs on China and Vietnam, India is emerging as an alternative manufacturing destination, especially in electronics and semiconductors. So simply put, for India, opportunity galore. India's lower tariff rate could reposition India as a strategic partner in a deglobalizing world. That said, the road ahead, though, is quite tricky. Sectors like, say, automobiles, metals, agriculture may face demand uncertainty if a global recession unfolds. And now the major bad news, a prolonged trade war may also hit the rupee even further. That can delay FDI flows and cool down export growth as well. So while India is relatively shielded today, now, but market volatility and global interdependence mean caution is still the key. But how can Trump's tariffs stall the AI boom? Trump's sweeping tariffs may have been aimed at reshaping trade, but one unintended casualty could be the very future that he vowed to prioritize. That is the AI innovation. Data center dreams are now in jeopardy. AI needs infrastructure, and that means data centers, chips, power. With 34% tariff on China, 32% on Taiwan, 25% on South Korea, nearly every part of the AI supply chain, from GPUs to server racks, is now more expensive. Experts say that this could delay or downside projects like, say, Stargate, the $500 billion AI data center mega venture that's backed by OpenAI, Oracle, and SoftBank. With this tariff shock, it's near impossible to raise that kind of capital. This has been said by Gil Luria, the analyst at D.A. Davidson. Higher costs means slower build-outs. Even though semiconductors are exempt for now, tariffs on circuit board assemblies, transformers, steel, aluminum are pushing up the cost of building and powering AI data centers. And this is causing tech giants like, say, Microsoft, Amazon to pause expansion plans. Nvidia, AMD, and Broadcom shares dropped between 7 to 10%. Amazon, Microsoft, and Alphabet saw losses of 2 to 9%. Analysts warn that AI infrastructure costs are spiraling. And that brings us to the power problem. Tariffs are also hitting transformers and power equipment, already in short supply. With AI workloads consuming 10 times more power than traditional apps, energy access is now the choke point. Jeff Currie, who is the Energy Strategic Officer at Carlyle, said that we are facing a storm, soaring hardware costs and grid bottlenecks. So what are the experts saying? Demand destruction is quite real, with cloud and software spending already seeing cuts. Data center construction is slowing down, especially in higher demand areas like, say, Northern Virginia and Texas. Supply chain reconfiguration is underway, but reshoring or shifting to Mexico or Southeast Asia will take years. And that's why, as we said, good news for India. R&D in AI chips and cooling systems could stall as margins shrink. So at the end of all of this, what is the bottom line? Tariffs are adding friction at every point in the AI value chain, from chip supply and energy access to data center deployment and software rollouts. What was once an arms race is now a recalibration. If not resolved quickly, Trump's tariff shock could throttle America's AI lead, right when the rest of the world is catching up. So is America and the world quite literally headed for a recession? Here's where it gets serious. The Atlanta Fed revised Q1 GDP to negative 2.8%. Inflation is rising, but interest rates are falling, a classic recession signal. And consumer sentiments just hit the 2022 lows. And the world is seeing early signs of layoffs and corporate debt stress across tech and retail. To give you some historical context of tariff triggers, let's not forget, in the 1930s, the Smoot-Halley Tariff Act led to a 65% collapse in global trade, deepening the Great Depression. Tariffs rarely help the economy. They squeeze consumers, they trigger retaliation and break supply chains. Trump's tariffs could repeat the same mistake on a much larger, more globalized scale. So what could happen next? We are at crossroads. Possibility 1, the Fed steps in, cuts rates, stimulates demands, and we maybe avoid a full recession. Possibility 2, tariffs raise inflation, push prices up, consumption drops, tech piles up, and the US stumbles into a full-blown recession once again. Either way, this is not just about Trump or tariffs. It's about the fragility of an inflated global economy now facing shock after shock. So what can be the simple and actionable steps? This crash has the possibility to erase trillions. Tech giants are already bleeding. Retail investors are betting on a bounce. The Fed is trapped, and history warns us that tariff wars often end up in economic pain. So can this be the beginning of the 2025 recession? Possibly. But what is certain is that the markets have changed, the rules are shifting, and resilience will be tested. What do you think? Is a global recession in this year about to happen? Tell us in the comments below. For more real-time updates and insights like this, don't forget to subscribe to AIM TV because think AI, think AIM.